So with Synth, we have this fundamental view that you can't predict the price of Bitcoin. You can't say the price of Bitcoin will be X tomorrow, but you can give a probability, or you can model the potential outcomes of what the price could be. And you can give a probability of that. So you can give a probability of the price will be over $112,000 tomorrow. The price will be under $108,000. That's possible to start to model and get better at and improve at over time. And they've created this open platform. And Ethereum did the same. And it meant that a lot of like initiatives that want to be, I mean, some people say there needs to be more marketing. There needs to be XYZ things happening. It's very much up to the community, the group of people which hold the token or are active within the community to do that. And that's like by design, right? Like a decentralized network should have contributions from hundreds, thousands of different people. And that's like its power. Like they're open. People can join from all over the world, and they're creating new markets for things that people couldn't have ever imagined, right? And that's like, in my opinion, one of like the purposes of crypto. We're also seeing more centralized versions like Kalshi appear. Well, they're not appear, they're huge, but they also offer like a regulated environment to these type of markets, which is also super powerful. And I think they're going to continue to grow. We're not sure right now, like there's still like a huge amount of work for us to do. So, yeah, we're focused right now on financial assets. We might look at other assets in the future, but yeah, well, there's like a huge amount of work for us to do. There's been like discussions about like building out, in different industries, like using the same kind of approach. But yeah, we have so much work to do, and there's so much potential right now. I'm in this sector that, we're kind of laser focused on shipping this right now, shipping Synth as it is, improving.
Welcome to the Ventura Labs podcast. Today, we're joined by James Ross, the founder of Synth, Subnet 50. We cover his 12 years in fintech and crypto, Synth's Monte Carlo simulations for 24-hour volatility predictions for assets like Bitcoin and gold, revenue streams via ecosystem partnerships, API sales, and prop trading on prediction markets, the growth of on-chain platforms like Polymarket, the impact of the Tau halving, and their plan for alpha token buybacks. Now back to James with the 64th Ventura Labs podcast.
James Ross of Synth. How are you doing today, man?
Great, thank you. How's things?
I'm doing good, man. This has been a podcast. It's been another one that's a long time coming. So I'm glad to get you here today. Let's start with your background. What got you initially involved and interested in the fintech industry?
Yeah, for sure. So I've been working, I guess, like more broadly in like finance, fintech for like 12, 13 years, and been in crypto for like 7 or 8 of those. So yeah, I worked on like, initially worked in like an investment bank, then worked on multiple startups that were focused on data analysis. And yeah, then found myself like early on in the Ethereum community, playing around with different DeFi protocols, yield farming, doing all that fun stuff. Discovered platforms like Numerai, which was super interesting back in like 2016, 17, which focused in on data, AI, crypto. And yeah, since then been focused on building stuff, built out a blockchain called Mode. And yeah, more recently was a co-founder of Synth and have been working on this. For the last, I think it's nearly a year now that Synth has been under construction. So yeah, excited to tell you more about everything Synth.
Before we jump into the Synth, you did some crypto consulting work, I believe.
Yeah, so I had like a consultancy, a small consultancy. I sold it to a large agency called Hype. Around 4 or 5 years ago. And the founder of Hype had another company that he exited. So he went off and worked on that and was running Hype for the best part of 2 years, which was super fun. It grew from around 30, 40 employees when I joined to over 100. I work with a lot of like the top crypto protocols on like their growth and kind of distribution strategies. So yeah, it was a really interesting time.
How does that experience you feel translate to now the work you're doing in Bittensor with Synth?
I think that like, yeah, go to market, and thinking of different like growth strategies in crypto is like an ongoing challenge because things move so quickly. So like, on crypto Twitter, you see that like what's hot 1 month, 1 week, 1 year is not going to be the hot thing, 12 months later, or a few months later even. So you really need to think about like how you can build out a strong foundation for an organization, and then like with like a clear strategy and a clear goal, but then layer on top like lots of different like growth tactics. So maybe there's a certain marketing channel that's working, like doing podcasts. So then you go really hard on that for a while. And you test it, you see what the results are. If it's working, you keep doing that. And then you try and find a new channel as well to like, yeah, to work on as well. So it definitely taught me that you have to be very adaptable, as a founder and as a team. And you have to just, yeah, try and execute on lots of stuff at the same time, see what's working and then double down on it.
And you said 12 to 13 years ago about was your start in the financial industry. When was
Yeah.
your introduction to crypto?
Around 8 years ago, 7, 8 years ago. So I got introduced to Ethereum and Bitcoin, and yeah, started like, I guess, reading up on, yeah, the kind of core principles behind these technologies, was really interested in like the decentralized nature of them. And was really excited about the possibility that like things could be built on Ethereum. That seemed really cool to me, that there's this base layer for tech innovation to happen.
There's been people that relate the Ethereum ecosystem with the ICOs and such to the
Mhm.
Bittensor ecosystem with subnets. How do you feel about that comparison?
I think it's like kind of a fair comparison in a way, because like Ethereum essentially like opened Pandora's box that like, hey, you can now fund a company in a decentralized way. Like people can send their ETH here, they can receive tokens over here, and these companies can like come into existence, and they have this new fundraising mechanism, right? And that was pretty cool to see. But obviously along with that, that openness came like a lot of like negative things, right? So ICOs, I think many people, I don't know, like if all people think they were net negative, but many people think of like ICOs as like a negative thing. Like there were lots of scams, there's lots of bad stuff happening, but like the underlying like fundraising mechanisms, like extremely important to like show what crypto can be, right? It's this like really amazing platform for raising money from anywhere in the world, low transaction fees, things can happen quickly, and companies can like get started. And that's super cool. And I think Bittensor, it's also, it's focused very much in on like AI and compute right now. It's an incentive mechanism. There's a much more of a structure. It's kind of like a more advanced evolution of startup fundraising, right? So some people say Bittensor is like a startup fundraising factory for teams that are really serious about AI. And the cool thing that I like about DeFAI and how Bittensor has structured the way that alpha tokens are very tied into like the ecosystem, is that they've also thought about like the long-term health of the ecosystem. I think a lot of people, their concerns with things like ICOs was that they were very short-term thinking. So people could raise money, they launch a token, in a few months the project's gone, right? There wasn't always an incentive for the team to continue delivering, because the incentive structure wasn't focused on long-term product development or long-term company development. Whereas Bittensor is very much focused on longer-term development, and really rewards teams that show they're going to consistently be delivering and improving their commodity, their company, their startup, over the long term. So yeah, it feels like DeFAI is like very much an evolution of what we've seen across crypto in fundraising.
Since you used to be a crypto consultant, say OTF came to you, what would be your advice to them on moving forward?
So I think that like BitTensor is in a pretty interesting position. Or like OTF, sorry, not BitTensor. Like OTF is in a very interesting position because they are doing an extremely good job of making sure that the ecosystem is decentralized, decision making is decentralized, and they've created this open platform. And Ethereum did the same, and it meant that a lot of like initiatives that want to be, I mean, some people say there needs to be more marketing, there needs to be XYZ things happening. It's very much up to the community, the group of people which hold the token or are active within the community to do that. And that's like by design, right? Like a decentralized network should have contributions from hundreds, thousands of different people. And that's like its power. So when people think something should happen, there's this coordination problem of like, how does it happen? Because you don't have one centralized entity going, okay, we're going to do this right now. You know, you have to coordinate different groups of people to make the thing happen. So I think a lot of people say that like BitTensor needs more marketing. And I think like to an extent that's fair, but the only way to like saying that kind of has no weight. It's like in like a decentralized world, like you need as a contributor to go, BitTensor needs to have more marketing. Here's 5 different proposals for BitTensor to like, or for the OTF and other groups to look at. Let's all work together to make something happen. That's kind of the only way to go about it. Saying that, within the Ethereum Foundation over the last year, they had a change in management and they've become a lot more hands-on, and it's definitely like benefited them. So there could be a world where OTF decides to become a lot more hands-on. But the way I think they should become more hands-on is by supporting the founders, like the subnet owners, the founders of the ecosystem more, versus like trying to like, I don't know, go and do like big marketing campaigns. So yeah, it's an interesting time. And I think generally like the core goal of OTF is to contribute along with other validators, TAL holders, community members to make like the protocol as strong as possible and as powerful as possible. And they're doing a great job of that right now.
You yourself, as a subnet owner, entered this space of prediction markets on BitTensor. There's been a lot of attempts at it. How did you decide on your approach of these Monte Carlo type of simulations?
Absolutely. So me and the co-founder of Synth, we've been very obsessed with thinking about the future and probabilities. And Sam's experience is in trading, building out these types of systems. And it's a pretty powerful thing, like prediction markets have given us this very powerful tool for thinking about the future and probabilities. And if you watch the top poker players or hear like a lot of top traders, they always talk about how they don't think about things if like they will happen or won't happen. They try to apply a probability that that thing will happen. Then when they have that probability, they decide whether they're going to trade for or against that probability happening, right? So with Synth, we have this fundamental view that you can't predict the price of Bitcoin. You can't say the price of Bitcoin will be X tomorrow, but you can give a probability or you can model the potential outcomes of what the price could be. And you can give a probability of that. So you can give a probability of the price will be over $112,000 tomorrow. The price will be under $108,000. That's possible to start to model and get better at and improve at over time. And so this was really perfect, like a perfect task for a subnet where you have lots of miners competing with these like volatility predictions, giving probabilities to the future asset prices, and then being scored on these continuously. And like so the task, like for us, like it made sense that this task can work as a subnet. And, it was possible that we could have launched something completely different. Like we didn't have to launch this on Bittensor, but the incentive mechanism really made sense. And Bittensor was like a perfect place to kind of bootstrap this, get it going, get interest from miners, validators, all these like really smart people, get feedback and start to like make a really robust kind of ongoing, I guess it's like a quantitative modeling competition. And it would have been very hard to do that somewhere else. So yeah, it's kind of like we went from like thinking about this, how to solve this problem of like, we want to start to model probabilistic outcomes of the future. Asset prices make the most sense here. We also think that different types of AI agents, different types of like market participants need this data. Okay, how can we get some really robust data around this? How can we like build like, essentially the best data sets? Okay, an open competition makes the most sense here. Our job is to design a really robust scoring methodology. And yeah, that's what we found like Bittensor was really, really good for.
The way you guys have designed this competition is each miner will give 100 different price paths for the next 24 hours. How did you decide on the 24-hour time frame, and what limits you guys from changing that time frame to shorter or longer?
So we decided on 24 hours because a lot of markets, especially options markets, are like 1 day or 0 days to expiry or 1 day to expiry markets. So it's also like it works well in the amount of data you need to model and like the consistency of modeling that data. If you want to the way you score the data which is being modeled, 1 day works well because you score daily, rewards are given out daily, or we score on a continuous basis, but rewards are given out daily. In Bittensor, like in 24-hour kind of epochs, I guess, windows on an ongoing basis. So it like 24 hours just kind of makes sense for this. Also, if you want to know if a model's good, it usually needs to run for a few days. And then you can like score continuously, like every day, get a much better understanding of if the model's good. And that's great because that's not too much time, right? So when a miner registers, within a few days, they can kind of see where they are in the leaderboard. If it was like a week-long period, then miners might have to wait like a week or 2 weeks or 3 weeks to understand where they are. That's kind of a long time, especially when it comes to like deregistration and these things, like these mechanisms. It works a lot better with, this 24-hour like style modeling competition we're doing. We could potentially increase or decrease the window of time. That's very possible. We're pretty excited about shortening the window or creating like a more high frequency version of Synth, which lives like under Synth or as a subnet. Especially as we've seen like lots of new markets emerge, like Polymarket has a 15-minute market. That's pretty cool. So we could actually ask for submissions like over a much shorter time frame, which would be cool. Just have to work on like the latency of like how quickly we can get those requests from miners. And how we work out scoring. But yeah, that's something we're actually really excited about.
You brought up the 15-minute market on Polymarket.
Mm-hmm.
Is that just, will the price be above or below this in 15 minutes?
Yeah.
Would you change or would you keep it the same how you have the competition going for non-time series prediction type of things like that, where it's just a binary outcome? Because you could still use the same method.
Yeah. So, I mean, it's still like probabilistic, as in like there's still a percentage, like a probability applied to like the yes or no outcome, right? But yeah, we're very like, we're keen to keep like the structure of the competition the same, the format of the competition, but we think changing the time scales could work, especially if we're like actively looking to trade on these much shorter time frame markets. we'll get much better data if Synth Subnet participants are giving us much shorter time frame data. But like right now, we're in a pretty good position with, the 24 hour into the future predictions, because most markets that we're looking at are expiring like in a day or in a few hours, which fits well.
And in terms of products, you guys currently offer an API. Are there is there anything else you guys plan on doing in that realm?
Yeah, so we have like a platform, which is more like, I guess, it's like the way to access all the synth data. So you can sign up synthdata.com. It's like a web app. You can, see the expected upcoming volatility. You can see the actual volatility from the last 24 hours. You can see how accurate synth predictions are. You can see the different assets that we run these models for. So BTC, ETH, Gold, and Sol, and actually Jito Sol, on Solana. And, that's quite cool. We have like a number of dashboards we're building out and tools for, people active in these markets. We're trading options. So, you can go and check out all the synth data, over at synthdata.com.
You mentioned you could see synth volatility versus actual volatility. How do you quantify that? Is there some type of benchmark out there?
Yeah. So, I mean, we're benchmarking against like the synth forecasted volatility versus actual volatility. And that's just like a percentage score. So, that's like, that's cool for people if they want to see like how well we're performing. They can just continue to check back, and they can see that like asset by asset. So synth miners might predict like BTC as like a 64% forecasted volatility, and they can see the next day what the actual volatility is. So we're super open with sharing the data and like the performance of the data, because we're getting more and more confident in it. The general benchmark for volatility models is this GBM model. And we've also seen an improvement with synth miners over the last 6 months, going from beating the model by around 20% to now by around 30% accuracy on a 6-hour time horizon. So things are very promising. And as we've seen emissions go up, synth miners have been working a lot harder. So that's also great.
A lot of subnets recently have started switching over to this open source, where miners open source their models instead of staying black box. Do you think synth will ever do something like that? Or is there more value in allowing them to be black boxed?
It's pretty interesting to see this trend. I think that like for the near term, we're gonna keep it like black box. We're very much like interested in the outputs. And like competition is fierce right now. And so we don't want to like force people to, open up what they're doing and potentially lose that edge and, stop working on the project because, copying like models is like definitely a thing or definitely an issue that multiple subnets could face. And we don't want to necessarily make that easier. In the near term, we're not looking to do that. I think like for us, it doesn't make sense right now, but we do think it's a pretty cool, development. I think the way that teams like Ridges have been doing this, it's, really cool to watch. So we're keeping a close eye, but for us, it doesn't make sense right now.
For the assets you support, I think you said Bitcoin, ETH, Jito Sol. I'm probably missing a few there, but how do you pick the assets and how do you expand those assets over time?
Yeah, so Jito Sol and Sol are like very similar asset. Like Jito Sol is like a staked Sol, but it's essentially Solana, or essentially Sol. And then also gold. So for BTC and ETH, it's like they're the most traded and most in demand crypto assets. Solana, we worked with Jito Sol, or Jito, and yeah, they supported us in like building out some infra to model Solana better. So we got miners building that out. And then gold, we discussed like adding different assets in our Discord, and Cons and a few other people came in and everyone gave their views. Then we did like a vote, and gold was the winner. We did a vote on Twitter and a vote in Discord, and yeah, gold won. So that's how we decide on gold. But we're currently speaking to like a lot of big ecosystems or like assets that people want us to model. So yeah, it's very much kind of from now on going to be decided by like business development efforts. We're looking to add one new asset per month. Obviously like that costs us and like the ecosystem time and money to add new assets. Miners have to update their code. Miners have to model a new asset. Validators have to update their code, etc. So we're looking to add one new asset per month. And support these assets with like, yeah, these dashboards and all this different kind of fun stuff. Then potentially even, yeah, trade those assets or run trading strategies across them on prediction markets, options markets, things like that.
And the one asset per month, is that because you just don't want to fragment emissions to miners too much? Or is it the R&D behind actually adding the asset that's the limiting factor there?
So it takes time for miners and validators to get up to speed on a new asset. I think like we could compress this down to like 2 weeks, maybe even like a week. We really pushed it. But yeah, right now, like one a month, I think makes most sense, for us. And like, there aren't that many huge, like large assets in the world for us to model. There's probably like a few hundred within crypto, like 30 to 50. So yeah, starting off at one a month and then increasing that to like 2 a month, maybe 3 a month at some point. That's kind of, yeah, how we're looking to like continue growing.
And you said you'll grow based off like business development.
Mm-hmm.
Would you be partnering with other people and they kind of tell you what they want to see, or what does that look like?
Yeah, so we have like different routes to revenue. Some of them we've already been exploring. For example, yeah, the partnership with Jito, or the grant from Jito to model Sol. That's one path. So we're looking to do that across all ecosystems or large ecosystems. We also have the ability to like sell access to the API. We had a few different teams, some hedge funds testing the API. So yeah, we're looking at working out a model for that. We have like all the dashboards, like a lot of custom work we can do for teams as well, or different ecosystems. And then of course, using the data in like our prop trading systems, to actively, trade, market make, however you want to call it, across predictions markets, options markets, etc. So there's multiple routes to revenue. We're seeing good results on the first one, which is working with ecosystems, and we're seeing great results as well on the last one, which is trading on prediction markets.
Which of those options do you think has you most excited? Which one are you most looking forward to in the future?
I mean, to be honest, like I've always found B2B sales like pretty tough. So I wouldn't say that's like the most exciting, but it's like very essential for us to like have the best assets and have the best like volatility data around these assets. And so working with like large ecosystems is super exciting because a lot of them, have hundreds of thousands, millions of users. So can very much like help Synth grow as well, like from a kind of like a retail awareness perspective. So that's pretty cool. But yeah, like doing prop trading across prediction markets, across option markets is also super cool. I think it's just, that's something that's a little bit newer. But yeah, I mentioned this on like the revenue search call, like we are very confident in our ability to use the Synth data in a productive way. So yeah, pretty soon we're going to be sharing some of the like addresses that are public, so people can track the performance of of like the strategies across things like Polymarket. So I think that's going to be exciting. It's like a big like put your money where your mouth is moment. Like you actually like, I think a lot of subnets, like a lot of crypto startups, a lot of like fintech startups, they talk the talk very, very well, but yeah, not many of them like walk the walk. So that's going to be a kind of big moment for us. So we're excited for that.
And I assume you guys are already doing this trading. You're just saying you're going to make it public so people can follow you doing it. What type of success have you seen so far?
We've seen quite a lot of success. I mean, initially when we're getting things up and running, it was going okay, not great. Now, like, seems to be consistently performing. So yeah, we've only put in low stakes, but I think we've seen like 50-60% gain in a few weeks on that account. But yeah, it's small stakes. So like, we don't want people to go off and be like, oh wow, this is gonna like, it's like, we're building up slowly, but so far like early results are good. Shows that like there's definitely like some good edge in the data, and it's up to us now to like scale that up across prediction markets, options markets, etc.
And for options markets, do you think you guys will just become like a market maker and just price these options, and you guys are now a better model than Black-Scholes for pricing options?
I mean, potentially, yeah. Like we think like the way we're crowdsourcing so much data is really, really powerful. And yeah, right now, like people can price options using synth data, which is essentially just using AI. So yeah, like it's potentially like a better way to do things.
And you brought up the prediction markets like Polymarket. What do you think the role of these on-chain prediction markets is going to play in the future? Because right now there's so much more liquidity in like the traditional markets and equities. How do you see the role of these on-chain type of markets developing?
Yeah. So, I mean, on-chain markets like Polymarket and Limitless, are again, like taking the best elements of decentralization, right? Like they're open. People can join from all over the world, and they're creating new markets for things that people couldn't have ever imagined, right? And that's like, in my opinion, one of like the purposes of crypto. We're also seeing more centralized versions like Kalshi appear. Well, they're not appeared, they're huge. But they also offer like a regulated environment for these type of markets, which is also super powerful. And I think they're going to continue to grow. Like I think bringing like retail traders from like perpetuals exchanges or like spot crypto exchanges over to prediction markets is actually not that difficult, because prediction markets, like they have a nice interface. They're pretty easy to use. They're like, as you said, it's like kind of binary outcomes. Like, is the price going to hit this? Yes or no? They offer like a different like user experience. And I think we're seeing like a lot of growth. Like a lot of people said after elections, oh, Polymarket, it's not going to do anything after the elections. There's going to be no interesting markets, but they've very much proven everything wrong. Like they've continued growing. Kalshi has also continued growing at like a crazy pace. There was just a South Park episode on prediction markets, which means they're like starting to go mainstream. So it's super cool, like to see. And yeah, I expect like a lot more retail volume to come to prediction markets in the next like 6 to 12 months. So it's an exciting time.
And I think you told me you, back in the day, advised the founder of Polymarket, right?
Yeah. So he had a startup, like a very early stage DeFi startup, that I was like helping him on. But yeah, it was like very, very early. It was before DeFi was really a thing. Yeah. I wouldn't say I did much on the advisory side, just had a few calls, but yeah, he's a great guy and yeah, phenomenal builder. He also, yeah, was like one of the youngest people. He was like mining Litecoin when he was like 15 years old. Had this like crazy mining setup. Yeah. So he's been in crypto since the very early days.
Right now, you guys, and it sounds like forever will be focused on time series, but is there any paths to where you go beyond time series data for your predictions?
We're not sure right now. Like, there's still like a huge amount of work for us to do. So, yeah, we're focused right now on financial assets. We might look at other assets in the future. But yeah, well, there's like a huge amount of work for us to do. There's been like discussions about like building out, yeah, in different industries, like using the same kind of approach. But yeah, we have so much work to do and there's so much potential right now. In this sector that, yeah, we're kind of laser focused on shipping this right now, shipping Synth as it is, improving.
Yeah. And being this prediction for financial assets as your subnet, I feel like this question has to be asked. What is your TAL token prediction?
TAL token prediction. I mean, I think that the halvening is a very crucial time for the Bittensor ecosystem. So that's December the 11th. And I think like the dynamic that's going to play out is going to be interesting, right? Because like in theory, like less TAL is going into the pool or half the TAL into the pool. Emissions of alpha stay the same. So in theory, like sell pressure will have like a larger impact. So you would expect the price of alpha tokens to go down. But then because of the halvening of TAL emissions, you would expect like all things being equal, there should be more buy pressure, less sell pressure on TAL, or the same buy pressure with less sell pressure. So TAL price should increase. So yeah, I think the dynamic is going to be that TAL price increases a lot. And potentially subnet alpha prices, drop slightly against TAL, but increase in dollar value. So subnets are still a great choice right now. Especially because you get the additional APY. So I think that, yeah, things are going to kind of like find some balance. But yeah, people should be really focused on Bittensor for the next couple months, as it's like a really crucial time for the ecosystem for subnets. Historically with Bitcoin, whenever there's a halvening, it's like the price generally goes pretty crazy. And that's a great thing. So yeah, let's hope the same thing happens with TAL.
All right. Well, James, I got one last question for you here today. And that is, what advice would you have for people wanting to utilize predictions from miners on Bittensor? Because you're not the only subnet that does predictions. So it's like predictions have been tried on multiple subnets. What's the best way to utilize these predictions?
Yeah. So I think that like you have to understand that as like a subnet owner, your job is to create a competition that can't be gamed, which is very hard. You have to create enough excitement amongst, members in the ecosystem, participants in the ecosystem. So you have a decent amount of emissions. You need to focus on like get the emissions curve being lucrative enough for like the best people in the world to come and mine your subnet and contribute that data. Because if you can create that competition that has some of the best data scientists or the best people in the world competing for these predictions or whatever you're trying to do, then you have something like extremely valuable. And there's hundreds of different ways you can use that edge, that alpha, for your benefit, right? You can sell it, you can trade on it, you can, do a lot with it. So the core goal has to be like focused, like really on creating like the best competition and the best product, which is essentially this output, this commodity, this data. When you have that, like you have everything. And you'll be able to find a way to monetize. And then your job as a subnet owner is figure out the different ways you can potentially monetize that, and then bring value back to the alpha token. So you create this like flywheel.
I said that was going to be the last one, but that brought up another follow-up I had. The alpha token, the alphanomics, as has now been coined a term. What is your plan for that? What do you see the role of your alpha token being?
So like I kind of stated this publicly. I think someone said legally I shouldn't be stating it publicly, but whatever. I'll do it again. Already said it once. Like our goal is to like be a top 10 subnet. And this ensures that we can secure enough emission to know that the quality of data is going to continue to be high. Therefore, that data is going to be valuable. We can use it. So yeah, we have plans around buybacks to continue to grow the ecosystem and ensure that like Synth is up there on the leaderboard. Like that's really our goal. Like if the alpha token drops in price massively, obviously the quality of the predictions go down. The quality of the data goes down. The alpha price is higher. You see much more interest from people coming in, and the competition gets much more fierce. The output gets much better. And that's what we're trying to achieve. And we see like this period between now and the halvening is like a crucial period for like all subnet owners, to try and essentially get into like the top 10, the top 5, the top 15, top 20, like, and secure good emissions. Because that will definitely, like, the competition between subnets will get much more fierce after the halvening as well.
How do you actually get there though? Like, what are the tangible steps? Is it just trade these signals, take those profits, recycle them, and it's this upward loop?
Pretty much. Yeah. I mean, more for us, it's like more partnerships with ecosystems which generate revenue, keeping the costs of our team like super low, keeping our team lean, working closely with like different participants in the Bittensor ecosystem, telling about what we're doing, working closely with people who consume this type of data and are interested in this type of data, partnerships with like big platforms. It's like, it's a combination of things, like doing podcasts like this, telling more people about what we're building. It's like, we've kind of gone from like being hyper focused in on like improving like the data and the product to now like, okay, how do we like tell more people about this, get more people excited, and start to like really go big on like BDM partnerships.
All right. Well, James, I appreciate you coming on today. Thank you.
Thanks so much. Really appreciate it.